Brandon, thanks so much for joining us here. We're here at the Blossom Investor Conference in Toronto, and it's an amazing event. It's unbelievable. Like, just since last year at Stack Market, now you come a long way in such a short period of time at the Rogers Center. Brandon, I think when you started your YouTube career with Beavis, now Beavis Wealth, and now fast forward all these years later, and you're a father of two. How would you say your priorities have changed in terms of investing in that time, and how has it changed your investing style and strategy?
Thanks, Ambrose. Yeah, priorities have definitely changed. And when the kids came into the picture, the biggest thing that I noticed was just the lack of time. So, goals-wise, my goals, my objectives long-term haven't changed. It's to invest, to provide for my future. I'm looking here 20, 30, 40 years out from retirement. I'm still in my 30s here. But what did majorly change was the vehicles I used to get to those goals. And I went from being primarily an individual stock investor. I had a portfolio of about 26, 27 individual companies, which takes quite a bit of effort to manage if you want to do it correctly. And what happened was when the kids came into play, when Blossom started picking up steam and the startup had its demands as a startup does, switching to an ETF portfolio where I can essentially have my diversification done. It can be very passively managed. It's been a game changer for me. So the priorities and goals long-term haven't changed, but the way I'm getting to those goals has changed big time.
All right, awesome. Thanks, Brandon. And just one more question. I just wanted to get your take on, Blossom, how far you've come, and where you see the next couple of years with this company.
Thanks for asking. Next couple of years, who knows? I mean, the sky's the limit. We take it day by day. Yeah, we're really proud of our growth. We've doubled our user numbers this year alone. We're approaching 500,000 users. So it's so cool to see, and many of them we've been meeting, and we'll meet later on at the event today. But yeah, we got big ambitions. So yeah, our goal is to build the go-to social network for anything finance and investing. We love having you guys part of it. You guys are just amazing contributors to the platform. And yeah, I guess we'll have to see in a couple of years, but all right, well, we're moving that direction.
We'll be rooting for you.
Thank you, Ambrose.
Right, thanks so much, Brandon.
Pleasure. Thank you.
So, Marc, thanks so much for joining us here at the Blossom Investor Conference in Toronto at the Rogers Center. It's just amazing how far Blossom has come. And Marc, your retirement series, second act, you've been doing in 2025. Super interesting. I think retirement is one of those things that's always in the back of everyone's mind, but that we can kind of neglect a little bit sometimes. So on your end, have there ever been any comments or, kind of feedback on your retirement series second act that has surprised you or given you a new perspective on the subject of retirement?
Well, yeah, Ambrose, thanks for having me here. When you say surprise, I guess I'm not really surprised because in the business I kind of learned this, but it is still surprising that so many people put off retirement way too long, right? And when I was working with clients, I always kind of remembered around age 50, people start taking it seriously then because they can sort of see the finish line and they're going, oh, I better get serious about this. Now, often it's a little bit late to get started. Not too late, but it'd be nicer to have started earlier, right? So that's one of the cool things about being involved with Blossom here is there's so many younger people who are getting involved and they're just thinking about growth, the investment portfolio. But if we can instill in them the importance of planning for down the road, it's a killer. So yeah, that's kind of one of the biggest things. The other thing that really surprises me again is when people start focusing on their retirement and they start looking at how much the Canada Pension Plan pays. I mean, you pay into it for 40 plus years in many cases, and they're shocked at how little they get from it. So the average is somewhere in the range of $750 to $800.
Especially nowadays with how expensive.
Yeah, like it is indexed to inflation, but it really hasn't caught up to the cost of living. So that's something that really surprises me the most is people just have no idea of, I'm putting it to CPP, I'm good for retirement. You're not. You have to supplement it. That'll provide you with hopefully some food and some shelter, but that's about it. Not even that actually these days.
Absolutely. All right, thanks so much, Marc. And second question for you today.
Yeah.
What benefits do you think ETFs have for retirement portfolios in particular?
Well, the biggest benefit I would say is just the ease of owning ETFs compared to managing your own portfolio. I'm probably one of the anomalies because my whole life I managed individual securities in my portfolio, but most people haven't. So it's pretty complicated. And so if you set up a portfolio of ETFs, you have the professionals, you guys looking after it, right? So you don't have to, you can almost set it and forget it. I don't think you can go quite that far, but for the most part, the concept is valid there. One of the things that I'm happy, I'm in a position where when I vacation, I don't worry about the markets. I don't worry about some crazy piece of news coming out. You can structure a portfolio that can withstand those storms. Essentially, the ETF provider does that for you, right? So you can go away, and if you're an older person going on holidays, heck, you don't have to think about your money while you're gone, which is really is for peace of mind. It's really important. I'd also say, I know you guys specialize in covered call ETFs, and one of the biggest uses for covered call ETFs, clearly, especially as you get a little bit older in retirement, is just the predictability, the reliability, the dependability of the cash flow. And for people who are retiring, you're not getting a paycheck anymore, right? So that every 2 weeks something goes into your bank account, it doesn't go in there anymore. So having that cash flow coming through, typically on a monthly basis, is just provides you with that peace of mind. And for budgeting, it's so powerful, that benefit of the covered call, because they're able to use that covered call strategy to bump up the yield on the distributions. So yeah, that's kind of my take on that, Ambrose.
All right, thanks so much for joining me today, Marc. And that's the second act series on Beavis Wealth. Catch Marc for his expertise, and it's a really informative and entertaining series that's running in 2025. And thanks so much for joining me here today.
You betcha. Thank you, Ambrose.
We're here at the Blossom Conference at the Rogers Center, and I'm here with Paul McDonald, Chief Investment Officer of Harvest ETFs, and he's going to tell us a little bit more about HHIS. Why has HHIS been such a success?
Look, HHIS is really the types of companies I think that people want. It's what's been working in the market, and people really appreciate, I think, the structure of having 15 of these really dominant companies in one portfolio. And as we've seen over the past, kind of just under a year now, the nature of these companies put together is a really nice mix.
Yeah. How do you find that, there seems to be such a concentration of market cap with some of the bigger companies? How are you finding that? Are you seeing any feedback where people want those smaller cap companies within something like that, or it's like really primarily focused on those bigger tech names?
It's not just the tech names too. It's we've got a number of companies outside of tech that are leaders within their space. So we look at companies like an Eli Lilly, for example, within healthcare, dominant and has a lot of volatility around it, so we can generate cash flow, which leads us into part two.
Yeah.
So now you get these companies that are really working within the market. It's the types of companies that people want, but then on top of that, because of the volatility on the underlying stocks, we could generate a lot of cash flow from the underlying options.
Right. And what would you say is the biggest difference between your product that you guys have launched and versus other products on the market? Like, what are some novel sort of traits or characteristics around HHIS?
So I think a couple things. We have over $3 billion in our single stock franchise.
Cool. Fair.
This isn't our first run at covered call, so we're very familiar with how they work in the operational side. So I think having that history and certainly the expertise within this space has really led the market to gravitate towards our product lineup.
Subscribe to Harvest ETF's Insights. Join us and stay informed.